Good evening, everybody, and welcome to the Sunday Market Breakdown. It's the 29th of September. My name is James. For those of you joining me for the first time ever, this is where I break down the markets, or I break down my trades that I've taken this week. I am a Forex trader, and I do these Sunday Market Breakdowns every single week. I have done for the last, I think this is the 14th one now. So if you are joining me here, that is awesome. I'm just going to go ahead and check to see if everything is working. I did have some problems starting this one today, which is why I'm a little bit later than planned. But all is good. The technicalities of being a YouTube live streamer never fail to test me. To be fair, I've had quite a few weeks in a row where it's been absolutely fine and I felt like a real professional. But usually I have different cameras that I can use, and for some reason this week it does not want to play ball, and so this is what you're getting. But hopefully the main thing is that you'll still be able to see my trades that I've taken this week. You'll see why I took them, and then we're going to look at the week ahead. I do sometimes go through technicals for the week ahead, but to be perfectly honest with you, it changes day to day. So I would much prefer to go through the economic calendar, and leading up to that, when I go through my trades, I will also share a little bit about how I approach the markets, because it is, I don't think it's unique or special in any way, but I'm told by many people that they haven't seen stuff like this before. So I take that on board, and I fully accept that perhaps you haven't seen the type of trading that I do before. And I think it's important to share that, because I, like many people that started trading, struggled in my earlier journey. Trading is not for the faint-hearted. It is not easy in the beginning. And I describe it very often as being the hardest way to make easy money. Hard being that to actually make it to the other side and have some idea of what you're actually doing in the markets, going through all the ups and downs, takes time, dedication, patience. It takes a whole lot of self-reflection as well to get to that stage. And so, I don't think trading is something that is easy for people to pick up. I think trading becomes even harder if you have come over from some other type of strategy, and then that, like the guys I have that I work with, they the people that haven't ever traded before tend to excel faster than those who have. And the main reason being is that I think as beginners we pick up all kinds of different strategies, because we do this thing that I call strategy hopping. We blame the strategy and not ourselves, and therefore we think the magic answer is out there, and one day we will find that bullet strategy, that sniper entry strategy that will guarantee that all our trades are absolute winners every single time. And it just does not exist. Taking trades is great, but also not taking trades is also a trade, in my opinion. Like your decision to stay out of the market when it's not time to be involved is also critical, and that's something that you will develop over time. I've been trading now for the last 5 years, 3 and a bit. I probably have to adapt what I'm saying here because time is going on. But for the last 3+ years, let's say for now, I've been trading successfully. I have over $1 million in funding, and and I also have my own capital, which, to be fair, I did start with as well. Full transparency, I didn't start from some hard luck story where I was living in my mum's basement and had to, and working at McDonald's and trying to make ends meet. That wasn't me. I actually had some success in business prior to that, where I sold my company. But still, that did not give me, it didn't give me a leg up in trading, although I thought it might. But the market just humbled me in those early days. The only difference being is that I came in with my ego. I think the more money you have when you start trading, the more money you can potentially lose, right? So it's actually better to start learning to trade when you don't have that much money, in my opinion. It's also better to start learning to trade when you do actually have an income from somewhere else. I think learning to trade and relying on it's kind of like there's literally no other profession in the world that you would have a go at and see if you could make money as your income. Like, you wouldn't just all of a sudden decide you're going to be a professional basketball player, give up your day job and start applying for teams and shooting hoops all day every day. Like, that would be ridiculous, but that's how people approach trading. I don't know why. I guess because of the ease to start. Like, it's very easy to start. There's a huge amount of scams in the industry. There's a huge amount of people who have, let's say, less than good intentions for you. And on that note, I will just say a few words about the communities that I run. Oh no, he's a course seller. Quickly, everybody get off the live stream. Don't worry. I'm not selling any courses. Everything I do for the community is actually for free. So it's called Leveled Effects. The link is in the description to this video. If I hop over to my Brave browser and here we go. So this is the paid group. Oh, but he said he's not selling anything. I think I can charge for my time. You know, I have a lot of integrity around that. But we actually have the free group, which currently has 596 members in. So if you are viewing this video today on the 29th of September 2024, it's 596 members. The group is growing organically. My professional background prior to trading was in marketing, specifically internet marketing, digital marketing. I've spent tens of millions of dollars on Facebook and other platforms like Google AdWords. So if I wanted to, I probably could grow this group very quickly, but that is not my intention for this group. This group is all about going slow and sharing with people what I do in trading. In the classroom section, there is a course, but it's not for sale. It's completely free, as you can see in capital letters here, free. I take you through my leveled system, the approach that I have to the markets. I'm also going to share some of that with you today. It's growing quite nicely. We have a lot of people posting their results, and there's also the paid group, which I did mention before. It's currently at you can find it anyway. If you go to the free group, you can always join the paid, but I don't push it. There's not a huge amount of people in here, and that's the way I would like to keep it, because the success of this group itself will come entirely down to the results that I can get the members. So right now we're at a stage where members the group's been running for about 6 weeks, I believe. So that's the paid one. We're at the stage that after 6 weeks, I think I have around 50% of the group, maybe, that I'm aware of that are in funded challenges right now. And this is the group that I believe I will take forward and create 100 funded traders within the next 12 months. That's kind of like my put it out there goal. Whether I achieve it or not, I'm going to, aim for the stars? You might just hit the moon, or the other way around, I forget. But anyway, that's the idea. So teach my approach. I don't like calling it a strategy. I think that's very rigid. The approach I take to the markets is I trade pretty much all currency pairs, bar a couple here and there, just because they are particularly slow moving, and I do prefer some more movement in the markets. As traders, we make our money from volatility. So if the market's moving very, very slowly, there's less opportunities for us to make money. So you'll see that in just a moment. So that's Leveled Effects. If you want to go and check it out, it's on the School platform, which is a platform created by a guy called Sam Ovens. And then more recently, an investment came in from Alex Hormozy from acquisition.com. If you're familiar with it, if you're on YouTube, I think it's quite difficult not to have seen a video from Alex Hormozy, but it's a really cool platform, and it's the one that inspired me to start doing what I do here. Prior to that, I was just a guy trading by himself and making money from the markets. Now I have a cool community where there's a really good group of people in here, all doing the same things, trading with my approach. It's all about the other people. It's not about me. It's not about look at me, blah, blah, blah. Leveled Effects. Sorry, I was telling you the link. It's school.com. School spelled SKOOL.com/leveled, LEVELLED if you want to go and check that out. And so right now I will go ahead and get into the stuff for today. So Sunday market breakdown. This week I have taken quite a few trades actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I think it's growing each week. It's getting a bit nuts. But this week, kind of the last real trading week of Q3. And it's good to be aware of that. I think traders can get caught out sometimes when they're not considering where we're at in a particular cycle. Like Q3 for big institutions and people that place large volumes into the market are always thinking on a quarterly basis and positioning of their assets. So yeah, it does affect the market. Whether or not you want to include that in your trading style is up to you, but I like to be aware of fundamentals. I consider myself more of a technical trader because I don't think you can place trades without having a technical setup. That's the reason why you get involved. You need to have a clearly defined entry, a clearly defined first take profit, and you need to understand why you're getting involved in the market. And if you don't understand why you're getting involved in the market or where everything is positioned in the market, then I think you, as a pure technical trader, open yourself to a lot more risk and failure or potential failure just because you are unaware of news. I don't trade the news in the traditional sense. And when people talk about trading the news, I think that they're talking about taking a gambling approach, which is kind of like they're trying to predict if the data is going to be positive or negative for a currency. Most of the time it's both. So I think that's ridiculous that people would even try to do that. Fundamentals I just see as turbochargers for how I trade. When we have data releases, which is what I call news because it's data that gets released into the market, very often that data is already priced into the chart. That's why you will see, a negative outcome for a currency, and then price will move in the complete opposite direction, which doesn't make any sense. But actually it does, because price has been moving slowly towards that outcome already. And now whoever's been moving that in the market, like whatever moves the market, call it, Santa Claus, everybody has their own opinion. But if it's institutional money, it's people placing large positions into the market. They are moving the market in a particular direction. And when that data is released, they are going to be in a position where they want to take some of their profits from moving price to a certain location. So that is why you'll quite often see when the news comes out, the complete opposite happens to what should happen based on the news being positive, and then the currency just tanks. And you're like, how did that happen? Well, it's because it's been going positively for the last 2 weeks leading up to the data release. So the chart is already telling you that what is going to happen. So the data is always delayed. The chart is always telling you where it's going to go. And that's how I think that you're able to predict almost what is going to happen. Not that you should try and trade that way. But anyway, that's kind of how I approach things. So we've got quite a few trades to get through today. Last week, I also had quite a few trades to get through. I do my best to get through them and show you them all. I'm not really sure if I should really ask you guys who are watching. By the way, do we have many people on the live? I will just look. We got Yuji, Jolt, Chanad, Dima, Nguyen. Great to see you guys on the live stream. That's cool. If you've got any questions along the way, pop them in the comments. I will get to them at the end. Usually I have 2 screens up so I can actually see what I'm doing here on my Mac, but today I do not. So I will just keep going, keep an eye on time, and try and get through my trades. Seeing every single trade that I took, I don't think is that important really. I do the same bloody thing every week on the live stream. The more value, I think the value really is in knowing that I'm here every week doing this same stuff, that the approach never changes, it's always the same, and that my approach is basically trading levels. That was my drum roll announcement. If you're here for the first time, that's what I do. You'd be like, oh, okay, support and resistance. Not exactly, no. Buy levels and sell levels are different for me, and I'll explain why. And also what I look for when price moves into a level. I suppose you could say that I'm considering price action as well into a level. I want to see a very strong move. Ideally, that's my favorite type of setup. However, there are market conditions to consider. And the 2 main market condition types that I would use to differentiate what kind of conditions we are trading in a given day, and sometimes it changes throughout the day, so you also have to be aware of that, which is again why we look at the economic calendar, because that is what I use to gauge whether or not we are in subdued market conditions, meaning that price will kind of naturally get to wherever it's going to get to, and probably not in a very strong way unless we have some kind of like a flow, what I would say is a flow driver, like all of a sudden stocks start dropping. For example, stocks drop, dollar strengthens. What are people doing? They're trading their stocks for dollars, and then probably the dollars go into something else. Maybe it's a risk play. So investors are pulling their money out of businesses in the US and they're pumping it into, let's say, precious metals in gold and silver or something like that, as an example. So that's how subdued market conditions can change unexpectedly without you being aware of it. How are you aware of it? You can place triggers above and below stocks in the day. So you'll be notified on TradingView if stocks all of a sudden start to drop, or if they all of a sudden start to pump, and things like that. So I like to keep an eye on that. What else? Where was I going with that? Well, yeah. And then the other type of market condition is volatile. How do you identify a volatile day? Well, it's when there's lots of data coming out, i.e. news on the economic calendar. So if you're aware of that, you know that at certain points throughout the day, it's kind of like, okay, we've got dollar GDP coming out. Great, that's going to move the market. Dollar CPI, that's going to move the market. NFP, that's going to move the market. You know, all of these events, if you understand when they're coming out, it will move the market and you'll have a strong move into the level and you can profit from that. And that's how I trade. At the same time, I do believe the dollar drives the market in general. However, interest rate decisions are key for currency. I believe everything else leads up to currency interest rate decisions. If you have a CPI, which is basically inflation data announced, and it's good, is a positive thing. Well, usually with inflation, the banks increase interest rates to try and make things more expensive so that people stop spending so much money and bring it back down to an attainable level. And so if the economy is recovering, then the banks will start to ease off with the interest rates. So all the data leads to what I think is interest rate decisions. Again, I'm not terribly into fundamentals as a trader. I just think that we should understand the basics of it so that we understand why something happened in the market. I'm also a massive believer on journaling, which is kind of it's a thing people throw around at the moment. It's becoming a little bit more popular, which is good to see. But when things are kind of made to be trendy, people often lose the true meaning of it and why you actually do it in the first place. So for me, I tell the guys in the group that if you haven't planned a trade, you do not have permission to take it. And if you take the trade and it was planned and it didn't work out, well, congratulations. Now you've got something to go and investigate. And you will find out what happened with that trade. And you will find that the reason it didn't work will be for a specific reason. And then you can track that, journal it, and learn from your mistake. If it was a mistake, and progress as a trader. So I'm not here to teach you my strategy and promise you riches. The riches will come from doing this stuff over and over again. And it is kind of boring in the beginning. But if you have a genuine interest in the market and a genuine interest in self-development and improving yourself, that's what you're going to be doing. Trading is personal development on steroids. You will be tested, you will be frustrated, you will be elated. Like, it's kind of like if you don't have bipolar syndrome, trading will kind of get you there organically in some way or another through your journey. It's kind of like, massive highs, massive lows, questioning yourself, feeling frustrated, and dealing with all of that, all whilst having a normal life to also continue with. Maybe you've got a girlfriend, maybe it's a wife, maybe you have kids, maybe you have a job, maybe you have parents, maybe you have siblings. Like all of these things, you have to kind of coincide with your trading life. And that is why people do not make it to the other side, because of all these other factors that come into it. And yeah, I will say right now that if you just want to make money from something, there are far easier ways to do it other than trading. So if that's you, if you don't like hard work and you don't think that you can actually get to the other side of this, where there are, I do say the juice is definitely worth the squeeze. It is the hardest way to make easy money. I make easy money doing what I do, but it was not easy to get there. was it, everybody wants the view, but nobody wants to climb. And it's so true with trading. So if you're not willing to take the punches to the face or the gut, or, you know, be dragged through broken glass, then perhaps trading isn't for you. But if you can withstand all of that, then I think you can make a real go of it. And hence the reason I run the community, because I think people just lose their minds and think that this trading stuff doesn't work. It's just people selling courses, and that's the only way they can make money. And I agree, that's what a lot of people do. However, there are people that do make money from the markets, and there is a way to do it. You just need to be very cautious about who the hell you're listening to and why. You know, there are red flags to follow. You'll know what they are, but you'll still be sucked in by it, because as humans and trading, we're like light to flies. You know, like we're just obsessed with it. It draws us in. We know it's bad for us, but we still touch the fire anyway, even though we know it's hot. Like, that's kind of what I see in the industry. And the things I say are the opposite to that. And it's not sexy. I didn't arrive here on this call in my Lamborghini, and I didn't start by, you know, showing you some fancy things that I have, because I just think it gives people completely the wrong impression. But anyway, I've waffled on for far too long. I'm going to go ahead and get into my trades. I almost feel like I make this more difficult for myself by chatting away, but I think it's really important to kind of give my take on things. I think that's what I would want if I was starting out. I'd want to talk to a trader and be like, hey, what is actually real? Because I've been seeing this and that, and I don't really get, you know, how people are able to make money from this, because it just seems impossible. So anyway, euro dollar, dollar CAD, pound yen, twice I think this week. We had massive yen moves at the end of the week, which was really cool. A bunch of, as I said at the beginning, a bunch of people starting their funded challenges. I'll share a bit of that at the end as well, if I have time. So I better get a move on. Euro dollar long on the 23rd. I should really put the days on here as well. But so yeah, quite a lot of trades, but we'll go through them. I'll go through them quick. He says euro dollar. This I think was on 23rd. Was that Monday? I think it was Monday. Really sharp move in here. So really quickly, how I trade levels. What is a level? It's a candle body close on a higher time frame for me. So I don't trade anything under the 4-hour level typically. I prefer to take my levels from the 4-hour. It's my favorite time frame to trade, but I will always start from the top down. So I always want to know where we're positioned in the market. So I can see on euro dollar, we did have quite a big move down, where we actually found parity. I think it's 1-to-1 on the US dollar. And then we pushed up and we've consolidated, and now it's kind of like deciding time. Are we going to break the last highs that we had over here back in July of last year? Or are we going to come back down and remain in this consolidation? So I know that about euro dollar. But, you know, I don't think you need to be fully aware of that all the time when trading levels. Again, I'm just looking for a strong move into a level. So I could see from the 4-hour on this euro dollar move that we had this level that had formed. It already worked once. So for me, if you don't take into consideration this level here, this is how things worked out before. So my level on this would have been refined to this here. I've now adjusted it. It's up here because of the more recent price action. But what happened with this is I think we had a strong move into this as well. Yeah, as you can see, strong move down. We hit it here, and then prices then rebounded like this. Why did that happen? Because price hit a level, strong move in, level, boom, there you go. So whilst everybody's crapping themselves thinking, oh my God, euro dollar's like dropping, and they're all looking to get into a short, no, I'm standing there waiting to go long. Which is nice, because I am also a big believer that in life, if you follow what everybody else does, you will lose. If you do the opposite of what most people are willing to do, you will probably win. I know that's kind of very broad, but as a rule of life, it's kind of worked out so far for me like that. So strong move into the level, candle body close, and my entry goes right here. So I'll show you exactly what happened with the most recent trade. So price moved away, nice strong move away, and then we're heading back the other way again. Strong move down. I think we consolidated a bit up here. And boom. We had the strong move down. Again, I've adjusted my level. So this was the old level because we had this 4-hour candle body close. Price has now moved up here. I don't care about wicks. A lot of people will want to put their level right on the wick like this. Let's try that a third time. If you put your level here, you are going to miss so many times. Look at this 4-hour candle body close. I place my entry 2 pips above, sometimes a bit more if the spread is larger on a particular currency pair. I trade all the currency pairs. I do have preferences, of course, and I feel like I have a better relationship with some more than others, and so I use that in my trading, and that's perfectly normal. Your currency pairs that you like will evolve and adapt too. How I trade is also applicable to other instruments, not only currency. You could trade cryptocurrency, you could trade indices, you can, like anything. I trade indices as well. I don't touch cryptocurrency just because I feel like that's trendy and I don't like being trendy. So again, like following the crowd, I'm not really into that. So once again, I don't trade cryptocurrencies, although this works out pretty well for it. There's far more volume in the currency markets than there is cryptocurrency, and so like, why do you want to trade Bitcoin just because it's the flavor of the week? Like, who cares really? I'll leave that to the teenagers. But but yeah, the candle body close, price kissed it perfectly. Could call it a sniper entry. I call this my sniper entry system and charge you $5,000 for my course. But that's simple, and that's all it is. And I believe that trading should be simple. So that was my euro dollar trade. How I take my profits. I'm looking for what I call the first area of potential struggle. It's quite a mouthful, but it's basically exactly that. It's where I think price is going to struggle first. Why do I want it to be there? Because I want to be out of the trade. I want to cash my profits, and I want to, move on with my day. I want to be open to new opportunities in the market, and I'm not trying to squeeze absolutely everything that I could possibly get out of one trade. It doesn't help with my psychology to do that, and I believe that in trading, there's another thing that you'll hear me talk about a lot. There's 3 things that are important. One is your mindset, your psychology. It's not even mindset, it's how you feel about your trading. Do you feel good about your trading? Do you enjoy what you're doing? Or do you hate it and think that you're just crap at it and you wish you hadn't started and there's probably easier ways to make money and you're ready to blame the strategy and hop to the next strategy and buy the next course? Like, mindset, psychology is super important, but not in the sense that lots of people talk about it, right? People say, you've got to be unemotional. Well, you're not going to be unemotional. You're a bloody human being. So you're going to be emotional regardless. And so psychology is the key thing to protect first. Second is capital. So you've got to always protect your capital. So if something doesn't look great, then just avoid the trade. Like, it's fine. No one lost money by not taking a trade. So protect the capital. And third is profits. That is the last thing that you should focus on as a trader, I believe, in my humble opinion. And I also recognize that I may not be the best trader in the world, but I was the worst trader in the world. That I'm sure of. So having overcome a lot of challenges with my own approach to trading and probably being quite close to giving up many times, that puts me in a position where I can talk very confidently about what I do because I know how shit it can get. And yeah, that's why I put those things in that order, because psychology first allows you to keep going. In trading, your biggest enemy is the idea of quitting. If you quit trading, everything that you've invested is lost, right? And if you don't change your approach to something I'm not going to tell you that my approach is the best thing in the world. It's just, I really do believe it's the best way for new traders to get involved and not kill themselves with a strategy that's just going to blow every account that they start. And I recognize that there are probably other things that I could learn and I could use other strategies, but like, if it's not broken, why try and fix it? Because I am at a place now in my trading where I feel very confident. If I do take a loss, I'm cool with it. I will go and find out why it happened. But I'm so rigorous with my journaling and my tracking and my reviewing of what happened that I'm always looking for ways of how I could have done something better, but I'm not looking for ways to change everything that I'm doing. If I see something happen enough times, then I will look to change it. But until that time comes, I'm completely fine just continuing with trading the way that I do. I make plenty of money from trading and I don't need to be greedy with my approach. Trading scales with the capital that you have, not by holding a trade longer necessarily. Of course, knowing when to hold trades longer and when to not is something that you will get good at over time. But in the beginning, just take the profits at the first area of potential struggle. So that was a really long way and probably wasted another 5 or 10 minutes of the time where I could be going through my other trades. But I wanted to explain taking profits is really, really a good idea. Despite you thinking, oh, you know what? I just took 2 losing trades. So I'm going to hold this one a bit longer because it's going in my favor. So yeah, that's my reason for not taking profits here. Like that is going to make you fail as a trader. You cannot do that. So what I'm identifying here on this trade is there is a wick here. And I think that when price comes up here, we are going to start to struggle when we come into this region. Not only is it that wick, there's tons of other price action. Like if I go all the way back here, you can kind of see that all within here, we've had like uppity downy price action. And so whatever other strategies want to call that, they can call it whatever the hell they want. Liquidity grabbing, order blocking, whatever the terminologies are, I don't care. It's where price is going to struggle. So that's where I take my first profits. And then what I'll typically do is leave a running position, usually about 20% of the trade. So if price does come a little bit further, I will cash profits a bit higher. And if price comes back against me, whatever, I've already made money. So that's how I trade, pretty much. So if you're interested in trading that way and you like what I've said, go check out school.com/leveledfx. Got almost 600 members in there right now. Again, I'm not particularly focused on growing it to be, 1 billion people. But we've got a good group of people in there right now. And I will get results for people. I know that because, geez, if I can do this, I had every problem you can imagine. And if I can pull it off, you can too. You just need to know who the hell to listen to. And if that's not me, cool. But just decide because, geez, like it's going to hold you back. I gain nothing by telling you not to go and buy somebody else's course. Mine is free. So go do it if you want. But if you want to get extra help from me and come into the paid group, like many other people, like that's your decision. And then I can take you seriously. But if you're not going to, if you can't even like pay me a small fee each month for me to help you gain a skill that's going to make you tens of thousands, if not hundreds of thousands, if not millions of dollars, then like that's almost insulting to me, to be honest. So anyway, that was euro dollar. Now I'll go through the other trades quite quickly because that's why I took this. Green line is my first area of potential struggle. White line is my entry. Okay, so that's it. No other trades on euro dollar this week, should I say. It was a really nice trade. And as you can see, price went all the way up here. Wow, James, you're shit. Why didn't you capture all that move? I just told you. So you get it. Dollar CAD, there was a couple of trades on dollar CAD. I know that some people got caught out on this one. This one was a strong move down, as you can see. So I'll talk about my trade in a minute. Strong move down, and it was a 4-hour level just over here. And price drew down about 24, 25 pips, went against people, but then came back up to, what's this? It's a wick. First area of potential struggle. So look how it hit it perfectly. I just draw a line across that, the other green line. See, I'm looking at this wick here. I point to it with an arrow. That wick. Price got here and then pulled back again. Did continue going further, but it's the first area of potential struggle. And the better you get at defining those areas, the better trader you will become. Entries are important. Exits are also important. So this one for me, what do we have? A strong move down, 4-hour level, 4-hour candle body close over here. You can see why that's a level. Why? Because price moved off it in a really strong way. So when price came down, I'm already waiting with my bucket to collect the pips. All right. So price came in and boom, we shot back the other way. Why was my first area of potential struggle here and not at this wick? I believe, and I can't remember every bloody trade that I do, but I believe it's because of this wick over here. So what we'd had is a bit of an interaction here. So as you drop down the time frames, you will see that price does something within the candles. There's always more information in each candle. Right now I'm looking at the 1-hour chart. I could go ahead and put my drawing thing on here. Also, I realized that my charts, if you have been following along, my charts are a slightly different color to what they usually are. What the hell am I doing? Watermark. Where is it? There it is. Professional. Yeah, my candles are a slightly different color because every week I'm showing people in the group different stuff and I'm drawing all over my own charts. So I'm kind of using separate charts to explain some of the points that I'm doing now. It's just my way of learning how to be an educator as well as an actual trader. So anyway, that's that. But yeah, 4-hour level. And I define my take profit by here. Price did actually come up to this wick over here, but whatever was going on for me at that time. It could have been that I had other positions on. It could have been that it got late in the day. Again, psychology comes first every single time. So I want to take profits off the table. I'm not going to take 5 or 6 pips. I'm not like bitching out of my trades because I'm worried that price is going to come back against me. No. Nothing like that. I leave full risk on the table. I never move my stop loss to break even. That is ridiculous if you're doing that. I won't go into why now because it'll make this thing even longer. But yeah, essentially 21 pips off a dollar CAD. Could have been double that, but coulda, shoulda, woulda. Pound yen, first short on this one was, again, watch how fast I go through this next bit. You guys can slow me down. I haven't even looked at the comments yet, so if you have made some questions, that's cool. I'll get to it. But we got to speed the hell up. So what do we got? 4 hour. Look at this, guys. What do we got? A level. Okay, cool. What did we have here? A strong move in. No shit. That's right. James is going to enter a short. Boom. Took it down. Everyone in the group got that one too. I'll show you that later because I got to go fast. But yeah, we had a group call in the morning. I do a daily analysis call in the paid group every single day. One for the London session, one New York session. So I have people from the US, have people from Europe, have people from Australia, New Zealand, and all these guys can make these calls. So that's the reason I do London session in New York. But yeah, level, price moved in, price moved away. That's it. And so all you have to do as a trader is get good at understanding this, building your confidence, which is something we do in the community. And with that confidence, you will become a better trader and things will get far, far easier for you. So that's pound yen. Pound New Zealand long. This one was a very interesting one. That was down here. And on this, we got a bit of drawdown, 26 pips. So what do we have? Oh, look, James has taken another trade off a 4-hour level. That's right. So basically this level down here, I could have taken a level here, right? But the other thing that I like to keep an eye on is this thing called average true range. Average true range takes the average true range price has made over the last 20 days. That's where it's averaged from, okay? Why do I use it? It's the only indicator I will ever allow on my chart. Every other indicator can just go and do one because it'll just make my chart look like a mess and I don't need it. So 4-hour level, but we weren't anywhere near the day's average true range. Average true range tells me that price is at the extremity of what it will normally move in a single day. When price moves a certain way for a long enough period of time, it has to pull back. It never just goes in a straight line forever. Why does it not go in a straight line forever? Because it needs liquidity and whoever's in that move down need to take profits. So just like how I get into a level, which is people taking profits. So the level is there. I know that whoever it is, you know, the boogeyman, Santa Claus, I call them the institutions because I just imagine, you know, banks have a lot of money and they move markets one way or the other. So if they are going short on this, at some point, somebody needs to tap the shoulder of the trader that's in this and be like, when are you going to take profits? He's going to take profits at an obvious area. So they'll get in a position the other way and they need buyers to come in and get out of their short position. And that's when I'll buy and ride this thing back the other way. That is how it works. That's all it is. I don't want to overcomplicate it any more than this. There's other things that you can bring into it as well. For example, this move here was actually, I like to know what the market driver is at any given time. For me, in this case, it was, I say for me, for the whole bloody world, it was New Zealand dollar. But just how I look at things is like this. So New Zealand dollar, if we zoom the hell out, we might have to go really out here. Let me go to the weekly level because this will make more sense then. So New Zealand dollar was just powering up this week here. So it was around here when we hit this, I want to say this weekly level. Again, it would help if I was using my actual charts and not these ones that I'm making up because it would be a bit quicker. But yeah, so it was that weekly level. So as price was driving up here on New Zealand dollar, we needed a pullback to occur in order for my idea on pound New Zealand to work out. So as New Zealand was just driving up, at some point when that hit its level, New Zealand dollar would stop gaining strength and would start losing strength for the same reasons. It will come up, hit a level, and then someone needs to take profits. So when those profits are being taken, price is going to move back the other way. And when it does, the same thing is going to happen on the Forex minor pair. So New Zealand dollar being the dollar pairing, New Zealand to the US dollar, will basically mean that on, where am I going? Pound New Zealand, which is the trade I bloody took. This one here. Pound New Zealand will also make its pullback, and will probably do so in a more significant manner because it is a more volatile pair than New Zealand dollar. The Forex majors, so anything paired with dollar, pound dollar, euro dollar, Aussie dollar, New Zealand dollar, dollar CAD, dollar Swiss, all of these are considered Forex major pairs. And the reason they are Forex major pairs are because they are paired with the dollar, but they tend to be less volatile than minor pairs like pound New Zealand. But you need to know what's driving. Like, was this because of a weak pound or was it because of a strong New Zealand dollar? This was because of a strong New Zealand dollar. And how do I know that? I go look at it. If pound dollar is not doing anything, I know it's New Zealand dollar that's driving price. So now I can use that as information to know how I'm going to trade this pound New Zealand pair. So you don't need to do that on every single trade that you take, but if you take these concepts and you apply it, it will only improve your edge. So yeah, that's that. Gotta like cut this thing down. Pound New Zealand long, that was that. CAD Swiss short. Oh look, what's happened? We're on the 4-hour chart once again. I'll go ahead. I'll keep ATR on the chart. That's average true range, and you can see. So what are we looking at here? 4-hour level. So I took a sell here. Great. Why did I get out here? Well, because it was the first area that price was going to struggle. That's it. That's why I took the CAD Swiss trade. As you can see, we came up. We hit average true range up here. I went into a little bit of drawdown. That's fine. I had to hold this trade overnight as well, which I was comfortable doing because it's CAD Swiss. It's not a very fast moving instrument, but yeah. And I used to hate the Swiss pairs because of how slow they moved. But then I realized that also that means they don't go into that much drawdown because they move so slowly. So I'm happy to hold them and actually really like them recently. So that was CAD Swiss. Euro Swiss short. So this was same day taken, also one holding overnight. That was this one up here. So what do we have? Guys, look, we got a 4-hour level. What else did we have? Average true range breached. Nice. Right into the 4-hour level. What happened? Price just turned around and went back the other way. Cool. That was the reason for the trade. Need I say any more? Euro New Zealand short. Euro New Zealand short. Yeah, so exact same thing. Here's the 4-hour level. Price moved away. Guess what? We hit another level down here. This was actually in timing with the pound New Zealand trade also. So again, further confluence. Pound New Zealand often moves with Euro New Zealand because they're quite similar in pairing. And so we had a strong move up into this level. We also had timing with New Zealand dollar once again. But the 4-hour level is the main reason why I took this trade. There was going to be a pullback. And so I entered the trade here, a little bit of drawdown, and then boom. Price, as you can see, reacted completely off this level here. It was also the 4-hour candle body close there. So yeah, this was a trade that I would take all day long. And that was the reason for taking it. You'll also note that I'm not afraid of drawdown. A lot of traders will lose because they have very tight stop losses. What they're trying to do there is they're trying to do the old, let's stick that on the chart. And what they'll do here is they'll be like, okay, well, look, if I can get in here and I can tighten my stop up to like there, then you can see my risk reward is now 8. So if I'm risking $1,000 here, I'll make 8 grand. I don't do that. I have my set risk. It's a little bit different to how other people do it. If you want to know how I do it, you can join Leveled Effects. I show you exactly why I do what I do and why I take that approach. But if you got in here and you had a 10 pip stop loss, I'm sorry, but you were right about the trade. You were completely right. The problem was your stop placement. So seeing traders get into things and getting stopped out when they were right is terrible. I use data to set my stop losses. So I track how much drawdown I go into in average on each currency pair, and I use that data in my trading moving forward so that I can maximize the trades that I take. I have an incredibly high win rate because I do it that way. Not saying that to brag. I'm just like, other people can boast about how much their risk reward is. Yeah, I will never see a 1 to 8 or even a 1 to 5 risk reward. I will never see that. And if that's you and that's your trading style, cool. Kudos to you. Like, that's good. But it's just not how I trade because I don't like losing trades. No one does. You'll say that, yeah, it's part of trading. I accept that. But when I'm right about the trading idea, like price is going to reverse here and then it comes up here, stops you out and then reverses, like that was not good trading. Maybe you'll say that my entries could be better. Maybe they could, but like this is how I trade, so get over it. That's the Euro New Zealand short. Pound CAD short, this was the same reason. So price came up to a level. I'm on the 4-hour chart once again. Strong move in. What do? Take the trade the other way. Why did I set my first area of potential struggle here? Well, look, it's the wicks. It's where price is going to struggle. And did it? It absolutely did. Shot back the other way. That was pound CAD. Euro CAD short. Same reason. Let's have a look. Boom. So let's rewind price so it's a bit clearer. This is more of a consolidation level, but it's also quite close to average true range, so I don't mind taking it. So as you can see, price is consolidating here on EuroCAD, and what I'm expecting is another move into this, and for us to, for us to finally break out of this consolidation. Why do I think that will happen? Well, I also have a basic understanding of price action. So usually, or typically, what happens with price action, for those or anyone that's watching this that does trade price action and knows a little bit about it, you will know that the price often has an impulsive move, then it has a sort of what is called a consolidation, and then we will actually see a continuation of the impulsive move to the downside. And more than likely, we're going to come down here, and what are we going to do? We're going to bounce off this level. So am I going to take a trade there? Probably. That's one for the future that I will be profiting on. And the reason I'll do that is because that's how I trade. So yeah, I was anticipating another strong move into this level. Well, I wasn't anticipating the strong move. I was saying to myself, if I see a strong move, I'm going to sell that level. So what I do, strong move in, I sold that level. Boom, off we go. That was the trade. That was the full analysis. Yeah, really complicated stuff. But look, guys, the main thing is I keep things super basic and simple because with trading, your weapon, if you like, if you want to call it that, is journaling and tracking and understanding through what you do yourself. When you place all of the power in an educator or a system or a strategy, you make yourself powerless to the markets. But if you can put yourself in a position where you know how to develop yourself as the trader, you will keep going forever in this. And once you start this way of trading, you will never stop. I will never stop trading. Why would I? Like this, unless something crazy happened to the markets and they weren't tradable anymore for some reason, then I might consider it. But I love working on myself. I love looking at what I did. I love seeing when I make a mistake and realizing it. You know, if I had a losing week for whatever reason, I'm talking like back in the day, if I'd had a particularly bad week, not to say that it can't happen again in the future. Of course it can. If I thought that, then I'd be an idiot and I'd be opening myself up to a lot of risk. But what I see in the traders in leveled effects community is they can often get very low if they've made a mistake and done something that they know they shouldn't have done. Or if they did something and they thought it was right, but it still didn't work. I know that they want to blame me. That's fine. That's fine. Yeah, it's James and his strategy. It doesn't work. See, I told him. It's just another course seller. But where you find power is in the review process. When you review it, and I've seen this with so many of the guys in there, and it's beautiful to watch it unfold, is that you almost come back to the market on Monday powerful, knowing that you really screwed it up last week, but you know why. And you feel like you've evolved and moved yourself forward. And because you feel like that, you're uplifted and you want to carry on. And you won't continue to make the same mistakes. If you're a relatively intelligent individual, there's only so many times that you will touch the hot plate before knowing that when the plate's hot, you don't touch it. You will be burnt, right? And so that's how you learn in trading. It's super basic, really primitive stuff, but it's just not talked about. It's not talked about enough. And so that's why people think that there must be some magic sauce out there that makes some people profitable and some people not. It's just pure stubbornness and resilience to keep going and accept that you are responsible for the trading that you do. The trading edge is not with the strategy. You can give this, everybody's trading the same strategy as me, the same approach, but different people have different results. And it only depends at where they're at and their own understanding of how all this stuff works, and being accepting that they are the problem. Always, like, it's you are the problem. I am the problem. It is not my approach. If something happens, it's because I haven't seen it. And I need to learn from that. And I find that interesting. So that is trading 101. I got to EuroCAD. Pound yen. Okay, let's finish on pound yen, because this was a beautiful trade. This is one of those times when I do wish I held a lot more of the trade, but it is what it is. Profit's profit. I took the pound yen. So this is all one trade, right? Pound yen and dollar yen. So, wow, how did you short pound yen but go long on dollar yen? Well, I will show you. I can hear the commenty thing going on. I'll check it in just a sec. I'm making good progress here by getting through the trades. So as I showed you already, earlier in the week, we had this pound yen trade. So that was this one up here. That was Tuesday. That was when all the group were in on that one too. Then this one was on Friday. And it was after we had, during the night, we had, it was Tokyo CPI, Japanese CPI. So inflation numbers for the Japanese yen. And we didn't have a massive reaction, to be fair. Like, we basically just carried on doing the same thing, which was moving up. I was looking across all yen pairs in the morning, so this is Friday morning, to see if there's anything that is worth taking. I wanted something that was close enough to average true range, not to be smashed by the market. I've been waiting on this level for quite some time. I didn't know exactly which one was going to work off, but if you get this off my chart, I hate my charts looking that messy. This was the level I traded on pound yen. And I know other people took New Zealand yen, Aussie yen, even dollar yen, and they were all good setups. And I posted to the group a video on why I ended up taking this pound yen trade. And it was purely because it had the nicest setup, and that was it. So, like, why was that level the standout level to me? It was kind of it's definitely what I would call an intraday key level, because it wasn't a daily level. It's kind of in the middle of stuff. If we go out to the daily chart, you can see, where am I? Lost myself. You see, that is not a level that I would trade on a chart, right? On the daily. So it's an intraday key level. I have to drop down the time frames to do it. But as I said at the beginning, I'm happy to go to a 4-hour level. I like that. I see them play out, and I use them for precision entries, or as close to precision as I like. I'm not afraid of drawdown, so I don't need to get, like, you know, within 2 pips of drawdown and it makes me a better trader. I don't care about that. I just use the 4-hour because it gets me a little bit closer to a more refined entry. But why I had that picked out is because all the yen pairs had to reverse at this point. Like, there's a huge, I zoom out to the daily, like, if I show you all of them. So there's euro yen, right? Same kind of idea, coming up to a really strong level here. It's the consolidation level after our last impulsive move down, when the yen started to gain a bit of strength. We had the same thing on New Zealand yen, see, but a bit more drawdown. We also had the same thing on dollar yen, a little bit more skewed because it's a dollar pair, so it's been thrown around by the dollar index as well. And what else have I missed? CAD yen, we also had same move, same thing, like coming back up to this consolidation level. You could have taken any one of these. And I'm not right by just taking pound yen. All the other guys, they took whatever they took and they managed to make profit out of it. But I was really happy with the entry on this one, pinned it perfectly, and then price dropped 458 pips. I took off the table 80% of my trade at this point, which was about 90 pips. And then I left a 20% runner down to this level here. So I left that on and I've now cashed it. Oh, I've cashed the other 10%. I've left 10% running at the moment because my bias is still to go short. Like, if you zoom out and look at the structure, like, you can't tell me that price is going to continue on up knowing that we've had an impulsive move, a correction, and now an impulsive move down again. Like, we're going to see a continuation on this. That's not a reason to enter a short sell on pound yen right now as soon as the market opens. That would be ridiculous. You have to have a reason to get involved. But looking at the way the higher time frame structured, like, I know that I'm worth holding on to a trade here, because by the time it gets down here, it's going to be the same size. That 10% will be the same size as the 90 pips I took off up here. And I haven't had to do any extra work for it. So that's why I do that. Dollar yen was the next trade here, long from 143. So I'll show you that. Same principle applied. We had this massive move on the yen pairs. And so I was looking for buying opportunities, because at some point after a strong move, the institutions, they got to take the profits, right? So after a 400-500 pip move on most of the yen pairs, I identified this level here. Why that one? It was nearer to average true range at the time. As you can see, this is the average true range line just here. It pinned it perfectly. My entry was on the 4-hour candle body close, because that's how I do it. That's how I've shown you all other trades that I've done are the same. And I literally used the Japanese stock market as my my dial here as to where to take my profits. So if we dial this back to the 1-hour candle, you can see that at the same time as hitting this level on the Japanese stock market, Works the same way that the US 500 works with the dollar. When the level gets hit, this strengthens and weakens the Japanese yen, because as people buy and sell the Japanese stock market, they're obviously trading in yen. So if you're buying stocks, yen is weakening. If you're selling stocks, the yen is strengthening because you're getting yen. So the demand for each one is going up and down. And so the Japanese stock market hit this level, and boom, I was looking to target this wick here. So at any point where we came up here, I'm pretty sure that if I drop down the time frames, it was this level on the 15-minute that we reached. That's when I got out of dollar yen. And if I show you on dollar yen, exactly the same thing. So that's where I ended up getting out. It was around 50-ish pips or something. I can't remember exactly. But yeah, that was the trade. So that's how I milked pound yen and dollar yen. This weekend was my daughter's 9th birthday. So on Friday I had family and friends flying in from various places. We were doing a lunch. Lunch became dinner. Dinner became live music and things that you do with live music. And yeah, it was a great day. But this all happened in the morning on Friday. So it really it was a nice day to reflect on like everything that was going on, seeing the community guys in the community winning as well, and then being able to take the rest of the day off and just go and chill, knowing that I've milked yen as well as Euro Swiss and Euro CAD on the same day. So the Euro Swiss long was just a real, like, I know this stuff's real simple to me, but it's the reason I do it week in, week out on here is to show you guys that I'm not changing anything. I'm still here. I'm still not selling a course. If you want, you can come and do this stuff as well. You just need to sign up to Leveled FX on the school platform. You can go to school.com and search for Leveled FX. Please try and avoid all the other Forex communities on there, because like I said, I mean, it's not about not doing another strategy. It's more about just committing to one and sticking with it. But look, 4-hour level. What happened? Really strong move into the level. Great. So what am I doing? I'm entering 2 pips ahead, and boom, first area of potential struggle. I'm taking my profits. That is my full trading week. Every trade I took, you can see it's real simple stuff. There's nothing here that's complicated. There is more to it, I suppose, but the more to it bit will come to you as you evolve as a trader. And like I said, I'm not here to just teach you a strategy. Any strategy can work. I'm here to help you understand better how the markets move together as one. There's never just like one move. Like, as I said, pound yen and dollar yen was the same trade. I just capitalized on it in different ways. Just like this Euro Swiss and the CAD Swiss trade, these were also the same trades. This was on Thursday morning. We had the, the Swiss bank's interest rate decision. And it created volatility. And I was already in Euro Swiss, and CAD Swiss triggered as well. So, like, that's it. Most of the, and 99.999% of all the trades that I take are pending orders. I'm not sitting there waiting to buy and waiting to sell. I've already planned my trades, so I just wait for the levels to get hit. The entries are already planned. They're already programmed into my trading platform. And so when price gets there, I literally have nothing to do other than I'm going to cancel this trade because something's changed, or I just sit there and be like, okay, well, the trade's going to trigger. Cool. Has anything changed? No. All right, we're doing it. That's all I do. That's how I play the market week in, week out. And the guys in the community are also loving this stuff too. So yeah, this week, actually, I'll do a shout out for Michal. He's actually Stephen in the community. He's obviously very worried about his online privacy, which is absolutely fine. But yeah, because I'm going to keep calling him his real name, and it's going to be confusing to people. Anyway, I'll call him Stephen. So Stephen's in the community, and he's actually just started a YouTube channel. So if you want, I'll actually I'll add the link in the description. I can't do it right now because I'm on the live, but I will for the replay of this put the link in the description, because he just started the thing last week. This is his first trading week. He's documenting what he's doing using the approach that I share in here. And as he said, he's done his first week. He's still in the game, and I believe he's 2.8% up already, which is a really nice steady pace when you're taking a funded challenge. He's on the $100,000 account. So when he passes, he will get $100,000 in capital. He will trade that just like he's trading it now. So this week he would have made $2,800. And at the end of the 2-week period, whatever his profits are at that point, the prop firm will then pay him 80% of those profits. That's how it works. Yeah, most traders just lack capital. And so we're not about trying to double and flip accounts and do whatever. Like, just learn to trade and the money will come to you. Investors want a return on their money. Not many people know how to trade or can do it because, like I said, it's difficult. But with the right help and guidance, you can do it too. Like, so that's Mihal. Then we got Josh. Josh is in the Philippines. I mean, crikey, I'm reaching people in the far, far distant worlds from the one the one I'm in. Josh is on 4.6% this week. He's just done his first week, and you know he's doing all right. He's also 18 years old. So if you're young like Josh and you're interested in trading, Josh's advantage in all of this is that he hasn't learned to trade in anywhere else. And, you know, I know I'm biased in saying that, but he had no preconceptions coming in. He didn't know about other things, exponential moving averages, simple moving averages, Fibonacci's, liquidity grabs, and whatever else gets taught out there, which I'm cool with, by the way. I just think it's too complicated to track and journal as a new trader. So yeah, he's in there doing it. And we've also got Yuji. Yuji's on 2.7%. He's also on $100,000 trade. So again, he would be on $2,700 for his week's activities this week. And it doesn't stop there. As soon as these guys pass their $100,000 accounts, guess what I'm going to get them to do next? I'm going to get them to reinvest their profits in a $200,000 account. And at that point, there'll be $300,000 funded, which means that $2,700 will now be closer to $8,000 or $9,000 for the week's work. This is a reality, and you guys can all do this. How do I know? Because I couldn't do this at all in the beginning, but having overcome so many of the challenges, I now think that, geez, if I can do this, anybody can really give this a go and make it happen. So yeah, just wanted to find that pound yen trade from the week. What a great week. Which funded account? Everyone collect on GJ. And it's like, boom, you see I shared my profits here. It's on a $100,000 account. And yeah, he was in it. Taking it on his challenge and his personal. So he's paying the bills at the same time. George was in it too. He managed to take 62 pips on that. And in the beginning, guys, I don't want you trading big money. If you trade big money in the beginning and think that, oh, that's cool, I'm going to go listen to James, I'm going to learn something from him, and what I'll do is I'll take his approach and I'll try and make like a few $100 in the process, and I can reinvest that. That's cool, but again, remember the process. Psychology first, capital second, profits third. And the reason it's that way is because if you want to learn and get better, the last thing you need to be is feeling really shit about the money you just lost this week. You will not be able to improve as well doing it that way. So until you build your confidence and you build up your data, I really do recommend you just trade with micro lots. And that's the same process that you see every one of the guys who are now doing funded challenges. They all traded with micro lots, and I made sure they did that. I checked their trading history. I gave them feedback on it. And now they're in a position where they're just doing the same thing. I don't know how they're feeling, like psychology-wise or like emotional-wise when they're actually in the trades, because now the numbers look bigger on the funded accounts. But as long as they can keep playing it like it's a game, because that's all it is, then they will eventually be collecting the profits too. The money will be real. And I know that to be true because that's exactly what I've done, you know? And so you don't need to be the best trader in the world to do this. So yeah, Michael got it as well. Janad grabbed it as well. Suf missed it, but I know he collected on Swiss yen on the Swiss interest rate decision. I missed that trade, so that was really nice. Proud of him for doing that. Lubomir also grabbed it. So yeah, really cool one. But yeah, I'm just going to go and have a quick Scooby at the comments. You guys have been chatting to each other, or have you actually asked me anything? TH Target. Hey, I've recently joined and love how much you've shared in your course. Thanks, man. Or lady. I don't know from your name. But yeah, I get a lot of really good feedback and it makes me feel really cool. I'm not going to lie. Why do you do this, James? You make so much money with Forex. Why are you doing a free course? Well, it isn't to make money, is it? Right? So yeah, I do it a lot, partly for the love, to be honest. Like, it is cool. I mean, tell me when you get compliments from people that you don't feel good about yourself. It is good. Mike, hello. See you on the call. That's good. UG, yo, great trade. Yeah, I assume you're referring to things I was looking at here. Negative. GCAD, great. Yeah, it was a good one. Hey, Mahal, I see you're on. I know you weren't going to join, but it's good to have you on here. Bam, bam, bam. Mike says he's working, just getting bits and pieces of truth bombs. Yeah, man, spitting the truth bombs out, keeping them coming. That's the thing, guys. I'm not going to sugarcoat anything. You may think I'm a dickhead. That's absolutely fine. I know I am. So come at me with your worst. Don't go on social media, they said. They'll say nasty things about you. Bring it on. That's what I say. Mahal also will be rewatching. Yeah, man. So the replay, like a lot of people don't know that this, if you go to the YouTube channel thingy bob here, if you go to the live tab, you will see all my previous live sessions where I just talk about the same thing every week. But if you're like me and you like a lot of repetition, if you like the repetition, then yeah, you can go back and watch me say the same thing over the last 14 weeks. There's hours of it, especially when I run over like I'm doing right now. Although to be fair, I did start 5 minutes later because I couldn't get my camera to work. Yeah. Hit like and share. Thanks, Joel. Appreciate that. Yeah, let me do my YouTube thing. Guys, if you enjoyed this video, if I've given you some content and real value here, I'd really appreciate the subscription from you. It helps the YouTube algorithm, as well as hitting the like button. And if you think I'm a dickhead, you can also hit dislike. I'm waiting for all the dislikes to roll in now. Yeah, appreciate it, guys. So no massive questions there. I mean, everybody knows what's up. Everybody knows that it's the same thing week in, week out. Again, for those of you who are new, hello, welcome to what I'm doing here. It's getting to a really cool point in the process where it's kind of challenging in the beginning because it's just me. I'm over here taking the profits from the market, and I'm waiting on people who are in the community to get funded and start shouting louder than me about all this stuff, because I'm from England. We're not very good at promoting ourselves being British. We like to be, I can't even think what the word is. I haven't lived in England for many, many years, but it's not humble. We're not that. Although there are some of us that are, but yeah, we're not self-promoters. So I'm really relying on the results of the community to be the marketing for the group, if you can call it that, and to get this out there. Super cool that I have the potential to help people get funded, and yeah, I'm really looking forward to seeing how it goes. But yeah, the community's at a point now where it's at a really interesting place where, like I said, people are starting to take their challenges, and so right now I don't know if I can help 100 people get funded, but I know that if people follow what I say and what I talk about in order to help you develop as a trader, it's inevitable that you will make it at some point. So it's not about if you get funded, it is really a question of when. And I'm sure there's a whole bunch of legal things that I'm saying right now that will come back to bite me in the ass at some point. But, you know, not financial advice. Anything you do with trading carries high risk. Don't do it. It's really bad and you'll probably lose all your money. Yeah, everybody should know that. If you're trading real money, or just trade prop firm money, it's not real. Your trades don't even go into a live market at this point in time, 29th of September 2024. Who knows? 1 year from now, maybe there'll be more trading platforms that actually do put your orders through to a live market, and the industry will gain a whole lot more balance. If that doesn't happen, I'm not sure prop firms will continue to exist, because the viability of them in the current model of using the losses from people failing their challenges to pay the winning traders, or people that can trade, obviously you're going to run into trouble at some point when you get really good traders on your platform and you're not making enough sales of your challenge. So yeah. Oh, hey Sana, good to have you on here as well. Maybe they copy trade from your account. Maybe they do. I assume you're referring to prop firms there. So yeah, maybe they do copy trade. I'm sure there's a whole bunch of legal things to do with that make it very regulated, and they have to walk a very, very tight rope to not do something that they shouldn't do. But yeah, it would be nicer if more of the prop firms actually did copy trade from the winning traders, the top traders, and made real money from the markets and that, and then use that to pay the traders rather than relying solely on people failing their challenges. It's not a very long-term model. I get how it worked in the beginning, and I get why the industry ran into issues. But if we want to see the prop firm stuff continued, that's what needs to happen. Otherwise, we need to go on to, I think, just a longer process. Like, I think if you can trade, cool, just roll up and deliver 6 months of your trading history, have it on a verified account, and then take real money from investors. And there needs to be a platform that does all of that, obviously, because trading with investors' money is regulated. Don't do it without finding out what you need to do exactly. But yeah, I said too much. My point is, prop firms are good. You can use them to profit, grow your own personal account right now. That should be your sole purpose in the beginning. You can get your first $100,000, £100,000, €100,000, 100,000 pesos, which probably isn't as much. But whatever it is that you want to get a hold of and build your own capital, that should be your first goal anyway with using the prop firm challenges. You definitely shouldn't get your first payout and buy a Lamborghini. That is idiotic. I'm sure I would have done that myself had I been younger than I was and had I been in a different position. Short the peso. Maybe if Trump gets in, maybe you can short the peso, the Mexican peso, that is. But yeah, to being smart with the money, like the best thing you can do is learn the skill of trading, get hold of your own capital, and then stick it in your personal account, because that can never be taken away from you. Nobody can ever take away from you the skill of trading. That is yours to keep and own forever. So yeah, that's why I think what we're doing here is so important. But yeah, anyway, guys, if you haven't got any more questions and we're all good, I'm going to go ahead and wrap it up here. If you haven't subscribed already, go ahead and subscribe. But to be honest, I don't really care about YouTube. I'm not sure if saying that helps the algorithm. But no, I do care, because that is my platform for getting this out to more people. And yeah, I've noticed a lot of people joining the free community and then upgrading to the paid once they've seen that I am who I say I am, and I do what I say I do, and I show up every day and continue doing this stuff. So yeah, go ahead. Like, if you like what you hear, you like what you see, school.com/leveledfx. The link is in the description. And also one more plug for Stephen. I think it's Steve Trades or something, the channel, but he's a member of Leveled FX. He's been in the group now since the beginning and is taking his challenge. So he's in the comments too, Michal V. Yeah, go give him some support, because trading's a bit shit in the beginning and there's lots of hurdles. It's very stressful, and he's doing his best to follow what I'm telling him to do, which I know is easier said than done. But yeah, go ahead and give him a like, give him a follow, share what he's doing. Helps me with Leveled FX too, because obviously there's people doing what I say and getting results. So on that note, I'm going to go ahead and wrap everything up. I realize I haven't looked at the economic calendar. Jesus. Let's see. 29th. Let me just refresh this. Sorry, guys. For the guys watching the replay, you kind of got an advantage here, because you don't get to watch me waffle on. You can skip and it will be chaptered as well. We should have NFP this week. Oh, it's the 1st on Friday. So what are we doing here? September. I've missed October. September to Saturday. There we go. So NFP is going to be on the 4th. First Friday of every month. Don't start rolling all the questions in now. How NFP week? Yeah, NFP, exactly. Do you have a profit limit for the week for psychology, greed reasons? No, I don't. I don't cap my profit. It's a really good question, actually. I know of other people that say, if you've had a good week already, stop trading. I think if that's your approach, you're probably still lacking trust in yourself. That's how I'd answer that. The market is not out to get you. If an opportunity comes and you're already up 3-4% on Tuesday, should you keep trading that week? Because usually in a week you only make 1%, for an example. Yeah, I personally don't stop trading if I've had a good week. I stopped trading on Friday because my parents were in town, and it was my daughter's birthday, and everything was kind of closed out by the morning, and we were going for lunch. So that also is a reason. Like, it's very real stuff. Like, it depends entirely on you. But if you're stopping trading because you're up a certain amount, that's only going to build fear in you leading into the following week. Because let's say you're on a prop firm, and prop firms typically pay you out every 2 weeks. So if you're 3-4% up on the prop firm, and then we roll around to the second week before you're going to get your payout, you're going to be fearful of taking trades because you don't want to lose what you already have. And if that's where you're at, then that is not a good place to be as a trader. If you're solely reliant on that income and you're still learning to trade, perhaps, yeah, it would be wise for you to stop trading, because you're like, okay, I can lock that in. That pays my bills for the next 6 weeks, for example. But I just don't recommend being in that position in the first place. I think it's much better to have an income whilst learning to trade. And if you don't have an income whilst learning to trade, have at least a year's worth of living costs in your bank or in liquid assets, like something, stocks or bonds or metals, or something you can sell and pay your bill next week if like something happens. So yeah, but great question. So the week ahead, we've got, I never really pay too much attention to the Chinese news. It doesn't affect me, especially on a Monday at 4:30 a.m. I will have my eyes closed. I'll be watching the back of my eyelids at that time, and I'll be uninterested. So if we do see any moves off the back of that, then obviously I can't capitalize on them at the time, but I will come and take a look when I pull up 6-7 a.m. We've got Euro retail sales, and we've got pound GDP year on year, which should be good to get pound moving. What else we got? So is this all Monday? Yeah, okay, cool. CPI on the euro in the afternoon as well. So when I say afternoon, I'm referring to New York session. I'm usually in somewhere between, if I'm in Portugal, I'm in London time zone, and if I'm in Dubai, I'm about 3 or 4 hours ahead, depending on summer daylight savings. So London for me is the morning, New York for me is the afternoon. Anything else is usually when I'm sleeping or not interested. Then we've got a Powell speech at the end of the day on Monday. So Monday, I'll be expecting a bit of volatility on pound pairs in the morning. Euro potential volatility from around 3. Again, it's pointless me saying the times. This is in GMT plus 3. So from like 12 London time, or 1 London time at the moment, till around, for the next couple of hours after that, maybe a bit of volatility on euro and dollar pairs. Then Tuesday we've got we've got Japanese large manufacturing index overnight. That might do something, so just be aware of that. If you're getting into any yen pairs on the Monday, I would be quite cautious about entering any yen pairs at the moment until you see the consolidations direction. As I showed you in the thing, it's kind of like we're going to be probably breaking the lows and moving lower. I would expect price could go up and it could go down. I tried not to make this analysis. Well, this isn't an analysis, it's just awareness of the week ahead and how I'm looking at it. Euro harmonized index of consumer prices on the Tuesday as well. So looking to this, and we've got ISM manufacturing PMI in the afternoon on the dollar. So Monday's going to be quite volatile. Tuesday's quite volatile, morning and afternoon. Wednesday, we're going to see a bit of things easing off. So Wednesday's most likely going to be quite a subdued day, which means intraday key levels will work. And then we've got employment change on the dollar in the afternoon, New York session, as that gets underway. So just be aware of the dollar positioning at that time and how it's going to affect anything that you're looking at taking. Remember, news is not scary. It just turbocharges your thinking. When you look back on the charts, the reason people love technical analysis is because in hindsight, looking at the charts, everything looks perfect. But when you're in the moment and you're seeing price hurtling towards a level and you're standing in front of it like, I'm going the other way, that can be quite scary, right? So, but in hindsight, it always works out that way. And that's where I see data move price quickly into a level, strong move, and then you see the pullback. Thursday night, we've got trade balance on the Aussie dollar. So if you're entering any, if any Aussie dollar trades are tempting you in on the Wednesday, which I know so many of you got tempted into this week, and it was fine. People trading Euro Aussie and Pound Aussie, that when there was, I think it was the interest rate decision overnight. You just got to, like, I would personally not want to be any trades knowing there's an interest rate decision on the Aussie dollar and I have to go to bed holding the trade in a bit of drawdown. Like, I don't want to be doing that. I'd probably close it out if I was in drawdown, unless I saw that all other Aussie dollar pairs were on a level and there was a high probability of price pulling back. Then we've got Swiss CPI on the Thursday as well. So morning, look out for some Swiss trades. Anyone that was watching the interest rate decision Thursday, this week just gone, there were some really nice opportunities. The great one on Swiss yen, another great one on Euro Swiss, another great one on CAD Swiss. Then we've got BOE monetary policy report hearings on the pound also on Thursday, but at the moment it's unannounced. And we've got PMI on the dollar. So Thursday is going to be a fairly volatile day as well, which is good. It means there'll be lots of activity, I would hope. But at the same time, Friday, we've got the daddy, we've got NFP, which has been absolutely phenomenal for the last, I don't know, I think 4 months in a row, in terms of levels being hit and profits being taken like in a matter of seconds. First day of potential struggle. So Friday is obviously going to be a very volatile day. Nothing in the morning. So probably a very subdued morning. It depends how the market's feeling after all of this other data this week. But yeah, Friday is going to be NFP. So all eyes on the dollar and its strength or weakness to see how things are being affected around the rest of the market. Good. I'm glad I got all that done. I didn't want to close off without doing the economic calendar because I've always done it in every single one. So it's pushed me over the time as it always does. I feel like I'm getting longer and longer at doing these. But yeah, I really am going to wrap things up there. But thank you, everybody, for joining this live stream. Really appreciate the support. And yeah, let's keep up the good work in Leveled FX. If you haven't joined there yet, go ahead, check it out. school.com/leveledfx. Link in the description. And I'll see you guys in there or the next Sunday market breakdown. Have a good one, guys. See ya.